Good morning, everybody. It is 9:08 in the morning on February 7th. And the title of the video is something new, something exciting. And that something is an indicator I just built with Perry. I'll be testing over the next couple weeks and then release to you guys. But I just want to explain it. I'll be going over it in every morning trade plan video, show you guys how it works. But what it is, it's basically just a couple of simple measurements here, and um, the green line is when there's a halfway back short. If there's a green line that's a halfway back short from the prior day's session to the current session, and the orange line is means there's basically the opposite. Sorry. So like here on Friday of last week, the halfway back short would have been this blue line, right? I have that drawn a little off, but if you were to draw a halfway back short, it would have been this blue line. Now, obviously, we had a massive gap down, so then the 50% level from that level to whatever the low is that green line. Now, the next day, you can see we make a new high in the overnight session. The halfway back long for that session is that blue line. You see how accurately that trades in the overnight session. Somebody just messaged me, so let me make sure I'm sharing the right thing. So you can see we've traded that 50% retracement. Okay, that halfway back for the next session, you can see again here, that blue line. See how accurately that comes into play. So what the blue line is doing is the blue line's measuring the 50% of the prior day's session, and the orange line is that means there's where that's the short and or the halfway back from the sorry, not the short, but the halfway back from highs. So if you draw that blue line, you can see as we make new highs, that orange line moves up. So today here, the blue, which guess what our overnight low is again here today. The blue is the halfway back long from the prior day's session. It also is basically damn near close to the overnight low, if not within a couple points. Now the orange is the 50% retracement from that level to highs. That's what the orange is. So from wherever this blue line is to wherever that high ends up being, that 50% retracement is. And this is going to be something I'm going to be, I just developed this with the help of Perry. And this is going to be something I'm watching. But you can see like yesterday that we stuck that orange. These seem to be very important levels for the trend. So today we're going to watch, and I'm calling this the day frame because all I'm doing is framing the day, right? I'm framing the day. Where is the 50% retracement of the prior day session, and where is the halfway back from that level? I know that's a lot to kind of take in, but we'll take a look here at the ES, and then I'll get into my other analysis. But using these as basic levels, I think is very important. You can see once again here are the levels. I mean, this is just strict code. Overnight we open right at that blue line, bid. What do we do here? And on the non-farm payroll, we bid it again. So you can see this is working in the S&P as well. So actually what I want to see, and I'm going to be watching it here today, is if we are going to remain bullish, can we actually stay above this orange line, which once again is the halfway back from the prior day's 50% retracement. So you can see if I draw that, basically the blue line to high, that gives us that orange line, and that's really what we've been holding. I want to see us continue to hold above that level. So that, ladies and gentlemen, it's called the day frame, just something I've come up with, and I'll be going over over the next couple weeks. Anytime you come up with something new, you definitely got to study it a little bit. And I literally just finished this morning with Perry, which is awesome, but I'm going to be excited to release that to you guys. And then let's move on to the NQES and the old school, old hand-drawn analysis, right? I feel like an old man doing that. So I have what is the 50 or the 38 of this extension. So Monday, if we had this big old traditional in the overnight session on the back of tariffs, yada yada, and then we technically blew through those targets. Now, what ended up being a variation of what was holding was that high of Monday to high, and we traded that, and then at the end of the day, there was that push lower, very swift, very quick, like 100 plus points in a period of like 30 minutes, which was really the only swift move all day. We completed targets, and then that same anchor new high, actually, that same anchor new high to that NFP, because we went higher before we went lower. We traded right down into what was the halfway back from the prior day session, but also the 38% retracement of that extension, which is going to give us an upside target here. And you can draw it to the overnight higher if you want a little bit less of an aggressive target, just to this previous high here. That would give us, I'm assuming, a breakout of non-farm payroll highs leads us up into 21,070 roughly, but as high as potentially, if we draw to the actual high, we're opening above the prior day's high, which damn near closed on highs. That upside target is going to be 22,007 if we can get a continuation higher here. But if we start breaking below that orange line, which I'll mark where that is at the end of the video, then I would kind of negate the idea that we're going to break out. But at this point in time, I'm anticipating a continuation higher. We're breaking out of this resistance, really, that was this zone here. We're breaking out of it. We're running back to the highs that we saw in late January, and realistically, we're going to be probably taking out liquidity sweeping on the daily chart next week, this 22,093. So that's what it looks like. Things are shaping up at this point in time. The news is out. We had non-farm payroll. The big earnings players are out. The market should kind of know what it wants to do until it gets exaggerated to one side or the other. Moving on to the S&P 500, same setup, which this extension, let me turn here to a 15-minute time frame. Let me delete some old draws as well that are no longer necessary, and just yesterday in the S&P, we didn't hold the same extension and that the NASDAQ did. The NASDAQ held a more aggressive anchor yesterday than the ES did. The ES got deeper pullbacks towards the end of the day, but here in the overnight session, that same Monday night anchor came down, stuck a 61. Also, what was the halfway back long from the prior day session, like I mentioned in that indicator earlier this morning. The upside target there is going to be a 61.25, and if we really run, 61.44. But as a reminder, and once again I'll go back to that day frame. The day for so many grids saved. I've been using Thinkorswim for too many years. There we are. The day frame here, I'm going to want to see us stay above these orange lines. 21. Right now it'll move up if we make a new high, but it's 21,861 in the NQ. And for the ES, if we can stay above those off the open, that's fairly bullish. 6101. So that's what I got here for the morning. I'll reload my normal levels, share those with you guys in the room, and I'll talk to you there. Get going in the squat. Everybody have a great weekend.